Welcome to the world's best crypto YouTube channel where I break down complex topics from crypto and blockchain tech into simple concepts. I am here to give you a competitive edge in the crypto space, whether you are a newbie or a pro. I promise you'll be getting a whole lot of value from this video, so stick around, get your writing materials and let's get started. Yo guys, welcome back to my YouTube channel. It's your boy Mega. Today we'll be looking into what is ICT, what is SMC, as well as ICT PD arrays. So this video is actually designed for only understanding the concepts of these terms, just a proper understanding of the concept, what they mean, the differences, and how you can get to know them. This video is not actually a video for showing you how to trade or how to select the best trade, the best entries, and stuff like that. So let's get straight to the video, and please kindly subscribe to my YouTube channel if you haven't. Thank you. So what is ICT, what is SMC? I'll be defining both because they go hand in hand, although a lot of people have the misconception of trying to differentiate one from one, but in this video I will make it clear to you guys. So ICT simply means inner circle trading, and these traders are called the inner circle traders. The inner circle trading was created by Michael Huddleston. The ICT method of trading is called the SMC. So it simply means that the inner circle traders, the method of trading, their own method of trading is called the SMC, which means the smart money concept. So ICT use the SMC. They don't use any other strategy. The strategy they use in trading is called the smart money concept. As we know, there are thousands of strategies out there in the market which is used by different people, but the ICT, that is the inner circle traders, they use the smart money concept in executing their trades. And I know a lot of people will disagree with me on this, but they can go and make their own researches. ICT uses the SMC for trading, and they are purely price action traders who makes use of less or no indicators. They take note of swing points in the markets because they believe they trade alongside with the banks, taking note of big moves in the markets. With this, I believe we all understand the terms ICT and SMC. In the next slide, we'll be discussing the core concepts of ICT, which is the PD arrays. What are PD arrays? PD arrays is simply an organized order or a sequence of how events should unfold behind the scenes following a specific price delivery algorithm. That is simply what PD arrays mean. And this is the main and core concept of the SMC strategy by the ICT. These PD arrays indicate the main reasons why price move from point A to B on the price charts. They are 7 in number and arranged by the order of hierarchy, which means when we see each one on the price charts, they simply respect each other depending on which is first and which is second. As displayed on your screen, the strongest is the mitigation block, followed by the breaker block, the liquidity void, the fair value gap, the order block, the rejection block, and the old highs and old lows. This we will look into subsequently. The mitigation block. A mitigation block occurs when price action creates a swing high, then retraces and creates a failure swing, followed by a swing low that completely disregards the previous low. So guys, this is simply the picture of a mitigation block. I believe we all can understand the concept from this. Like I said earlier, this is not a trade entry video. The breaker block. The breaker block and the mitigation block are almost alike, but the breaker block is simply a failed order block that results in a market liquidity being taken out and the market structure changes from bullish to bearish or vice versa. From this picture, we can see that the market took out the last high, then coming down to displace the last low, which was supposed to hold initially, making it a breaker block and not a mitigation block. This is the third according to the hierarchy. Liquidity void occurs when there are large imbalances in the market or lack of liquidity in the market, causing aggressive movements. And regardless of the difference of color, it is called liquidity void. And this serves as a magnet for the market because oftentimes we get to see prices come back, most times immediately, to fill a liquidity void before going back to its initial movement. The fourth is the fair value gap, or the FVG, which is a three candle structure that indicates an imbalance or inefficiency in the market, where the tails of the first and the third candles do not meet each other, making the middle candle have an inefficiency or an imbalance in the market, making it a very good point of interest as the market tends to come back to pick up the remaining orders before moving in the normal direction. Order blocks. This is a POI used by most ICT traders to execute their trades. Order blocks refers to a specific price area where large market participants, such as institutional traders, have previously placed significant buy or sell orders. Based on the order of hierarchy, the order block comes fifth, which means if there are any of the mentioned PD arrays that comes before the order block, it is likely that the other block will not hold because the other block is fifth in strength. So guys, it is extremely important to take note of their arrangements in terms of strength to know which comes first and which comes next before taking a trade. Next is rejection blocks. Rejection blocks are areas where price is strongly rejected, forming long wicks with big or small bodies, and they are important reference points in the market. In the diagram, we can see where price rejected previously, making it a strong point of interest. And the last PD array in the order of hierarchy are old highs and old lows, which serve as liquidity levels influencing price movements in the market. And guys, in an uptrend, all old highs are liquidity points, and in a downtrend, all old lows are liquidity points, which automatically draws price to them. So guys, that will be the end of the video, and like I said earlier, this is just a video for explanation and not a trade execution type video. So I believe with this we can understand the concept of ICT and the concept of SMC. And in a little summary, we all know that ICT traders trade the SMC strategy. Thank you guys for watching. God bless. Kindly subscribe, like, and share, and stay tuned for the next video.